Morning. Top Gun here, Saturday, February 20th, about 4:30 a.m. Pacific Standard Time. This will function as the YouTube pre-market commentary for Monday, February 22nd. All right, so yesterday, Friday, February 19th, 2021, was the one-year anniversary of the pre-coronavirus peak. The S&P closed at 3386 on February 19th, 2020, before plunging 34% to 2370 on March 23rd, before now ensuing on this incredible rally up to just over 39. I think 3907 is what we closed at yesterday. So we actually closed 15% higher in the midst of the worst pandemic in 100 years. Okay, getting more micro. Last week was what the great short-term trader and technician Scott Redler characterized as the digestion week. We just kind of tread water. The S&P lost 0.71%, but no technical damage was done. So presumably, since the trend is up, the market is just consolidating for the next leg higher. That's the presumption. No guarantees, but that's what any technical analyst would tell you. Okay, however, underneath the surface, the QQQ is showing a divergence. It continues to rise, although it's no longer leading as it was through August of 2020, but the percentage of its components above their 50-day moving average has declined since the beginning of the year from about 90% to about 70% on Friday in this nice chart by Arthur Hill. So those kind of divergences are something to watch. You know, price is price. That's the most important thing. But sometimes these divergences can signal, a change in price ahead of, in advance. The biggest story last week was the 15 basis point jump in 10-year Treasury yields. So this is really good for the banks who borrow short and loan out money long. So that the wider that spread, the more their net profit margin, which is the core measure of their profitability. However, it's bad for the overall economy where governments, businesses, and households are highly indebted. So a rise in rates squeezes their discretionary spending in other areas. The second biggest story was Bitcoin surge above 55,000. So Bitcoin continues to just skyrocket higher. Now, there was a story that blew my mind by James McIntosh in yesterday's Wall Street Journal about microcap stocks. He talks about 7 microcap stocks that have had just absurd moves. We're talking about like 1,000%, or in the case of Plug Power, almost 2,000% since the March lows. So the other stocks are Fuel Cell. Some EXPI brokerage, a number of different stocks that have just had absurd moves. And Plug, now the Fuel Cell went from a market cap of 39 million, a total penny stock, to being worth more than a dozen S&P 500 companies in 18 months. So it just doesn't happen. Now I took a look at Plug's fundamentals, half hour ago or so, and this is not about fundamentals because Plug has a market cap of about $34 billion and revenues of $216 million in the first 3 months of 2020, including a pro forma 4 cent per share loss in the third quarter. So their revenues are minuscule, they're not profitable, and yet the stock is up almost 2,000% since the March lows, and is now worth $34 billion, which would put it in the top half of the S&P 500. I really have no words to explain this kind of thing. Again and again, I'm struck dumbfounded by this market. I'm going to quote my most hated economist, Karl Marx. To those who understand, no explanation is necessary. To those who don't, none possible. Have a great weekend, everybody.